Have you ever wondered why Bitcoin ETFs are such a hot topic in the financial world? As we step into 2024, the buzz around Bitcoin ETFs continues to grow louder. And there's a good reason for that. These financial products are more than just a trendy topic. They could potentially reshape the way we interact with cryptocurrencies and the broader financial market. Bitcoin ETFs, or exchange-traded funds, are a new frontier in the ever-evolving landscape of crypto finance, sparking discussions and debates among investors, regulators, and crypto enthusiasts alike. Their potential to make Bitcoin more accessible to the general public, coupled with the promise of regulatory oversight, has many excited, but they're not without their potential drawbacks. The world of Bitcoin ETFs is complex and multifaceted, stirring up both excitement and apprehension. So let's dive into what exactly Bitcoin ETFs are and why they're causing such a stir. To start, what exactly is a Bitcoin ETF? Well, to answer that, we need to understand what an ETF or exchange-traded fund is in the first place. Picture it like a basket of investments that tracks the performance of a specific asset or group of assets. ETFs are traded on traditional stock exchanges, just like individual company stocks. They offer a way for investors to diversify their portfolios without having to buy each individual asset. Now, a Bitcoin ETF is a specific type of ETF that tracks the price of Bitcoin, rather than having to buy and hold Bitcoin directly, which can be a complex process involving digital wallets and private keys. Investors can simply purchase shares in the Bitcoin ETF. This way, they get exposure to the price movements of Bitcoin, but through a traditional investment vehicle that they're already familiar with. So, why is a Bitcoin ETF such a hot topic? For starters, it's about accessibility. A Bitcoin ETF would open the door for more mainstream investors to gain exposure to Bitcoin. It would allow individuals to buy into the crypto market through their regular brokerage accounts without the need to engage with the crypto exchanges directly. Furthermore, a Bitcoin ETF could bring more liquidity into the market. Liquidity refers to how easily an asset can be bought or sold in the market without affecting its price. More liquidity generally leads to more stable prices. Finally, a Bitcoin ETF is a hot topic because of the potential for regulatory oversight. With an ETF structure, there would be more transparency and investor protection compared to the relatively unregulated nature of the crypto market. Now that we understand what a Bitcoin ETF is, let's explore why they're so significant. In the upcoming scenes, we'll delve into the potential benefits and drawbacks of Bitcoin ETFs, the regulatory hurdles they face, and what their introduction could mean for the broader crypto market. Stay tuned as we unravel the intricacies of Bitcoin ETFs and their potential impact on the world of finance. What makes Bitcoin ETFs a potential game changer in the world of crypto, you might ask? Well, the allure of Bitcoin ETFs lies in their potential benefits, which include accessibility, liquidity, and regulatory oversight. Firstly, let's talk about accessibility. Bitcoin ETFs could potentially open up the world of cryptocurrencies to a whole new demographic of investors. Traditionally, investing in Bitcoin requires a level of technical knowledge that could be daunting for some. However, Bitcoin ETFs would be traded on traditional stock exchanges, making them as easy to buy and sell as shares of your favorite tech company. This would allow anyone with a brokerage account, from your tech-savvy nephew to your grandmother, to get a piece of the Bitcoin pie without needing to understand the intricacies of digital wallets and private keys. Next, we have liquidity. With Bitcoin ETFs, investors would be able to trade in and out of their positions with ease, just like they would with any other ETF or stock. This increased liquidity could potentially lead to more stable prices, as it would reduce the impact of large buy or sell orders on the overall market. Lastly, there's the benefit of regulatory oversight. Bitcoin ETFs would operate under the watchful eye of regulatory bodies like the Securities and Exchange Commission. This could provide investors with a sense of security, knowing that the ETF is subject to strict rules and regulations designed to protect their interests. So, to sum it up, Bitcoin ETFs could potentially make investing in Bitcoin more accessible, provide increased liquidity, and offer the reassurance of regulatory oversight. These benefits could make Bitcoin ETFs an attractive option for both seasoned crypto enthusiasts and newcomers alike. While these benefits are enticing, it's crucial to also consider the potential drawbacks. But we'll get into those in the next part of our discussion, so stay tuned. What are the potential pitfalls that come with Bitcoin ETFs? While the benefits of Bitcoin ETFs are numerous, they are not without their fair share of drawbacks. Let's explore these in more detail. First, let's discuss volatility. Bitcoin and other cryptocurrencies are well known for their price volatility. These digital assets can experience significant price swings within short periods of time, leading to potential losses for investors. Although Bitcoin ETFs offer a way to mitigate some of this risk, they are still subject to the underlying volatility of Bitcoin itself. Next, we have market manipulation concerns. Because the cryptocurrency market is still relatively young and less regulated than traditional financial markets, it's vulnerable to manipulation. This could include practices like pump and dump schemes, where prices are artificially inflated and then rapidly sold off for a profit. These manipulative practices could affect the price of Bitcoin ETF fees and, in turn, the investors' returns. Thirdly, we have custody issues. In the traditional financial world, assets like stocks and bonds are held by trusted custodians. But in the world of crypto, who holds the Bitcoin underlying an ETF can be a complex and risky question. This is because digital assets are stored in digital wallets, which can be hacked. There's also the risk that the private keys required to access the Bitcoin could be lost. Lastly, there's the issue of price discrepancies. The price of a Bitcoin ETF should, in theory, mirror the price of Bitcoin itself. However, due to factors like supply and demand dynamics in the ETF market, there may be discrepancies between the two. This could lead to situations where the ETF is trading at a premium or discount to the actual price of Bitcoin. With these pros and cons in mind, it's clear why regulatory bodies such as the SEC are cautious. It's crucial to consider these potential drawbacks when thinking about investing in a Bitcoin ETF. Knowledge, as they say, is power, and understanding these pitfalls can help us navigate the exciting but sometimes treacherous world of crypto investing. So, what does the regulatory landscape for Bitcoin ETFs look like? Well, it's important to understand that the United States Securities and Exchange Commission, or the SEC, is the main regulatory body overseeing these types of financial products. Over the years, it has been carefully scrutinizing the cryptocurrency industry, and Bitcoin ETFs are no exception. The SEC has expressed several key concerns about Bitcoin ETFs, all revolving around investor protection, market integrity, and the overall maturity of the cryptocurrency markets. Firstly, the SEC is primarily concerned about protecting investors from the high volatility and potential market manipulation associated with cryptocurrencies. The fluctuating nature of Bitcoin's price can make it a risky investment, and the SEC wants to ensure that the average investor is aware of and prepared for this risk. Secondly, the SEC has concerns about market integrity. It's no secret that the cryptocurrency market has been riddled with instances of fraud and manipulation in the past. This has led to the SEC being cautious about approving Bitcoin ETFs, as they want to ensure that these products will not be used as tools for illicit activities. Thirdly, the SEC is also concerned about the overall maturity of the cryptocurrency markets. While the crypto markets have grown significantly over the past decade, they are still relatively new compared to traditional financial markets. The SEC wants to see more stability and growth in the crypto markets before they feel comfortable giving the green light to Bitcoin ETFs. Overcoming these hurdles is not a small task. It requires comprehensive market surveillance and robust custodial solutions to mitigate the risk of fraud and manipulation. It also requires a more mature and stable crypto market, which can only be achieved with time and increased participation from institutional investors. The implications of these regulatory decisions are far-reaching for the crypto market. They will set the tone for how cryptocurrencies are viewed and treated in the financial world and could pave the way for broader adoption of cryptocurrencies in the future. How might Bitcoin ETFs change the landscape of the crypto market? Well, we could see significant changes. Increased institutional participation may fuel market maturation. As Bitcoin ETFs become more accessible, we might also witness broader adoption by everyday investors. And let's not forget the potential price impact. While it's hard to predict the exact outcome, these funds could introduce a new level of liquidity, possibly stabilizing prices or even sparking a rally. Only time will tell the true impact of Bitcoin ETFs. To wrap it all up, Bitcoin ETFs present a fascinating opportunity for the evolution of the crypto space. They offer accessibility, liquidity, and regulatory oversight, yet come with their own set of challenges such as volatility and potential market manipulation. The regulatory landscape continues to evolve and the implications for the crypto market are significant. If you enjoyed this video and want to stay updated on the latest in the crypto world, please hit that like button and subscribe to our channel for future updates.